You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. The futures markets can be downright scary. Limit up, limit down. What the heck is RBOB anyway? Are they going to dump a truckload of soybeans on your front lawn if you click the wrong button? Come to think of it, maybe you should just stick to your comfort zone. Or you can break out of it with the Futures Rundown. The Futures Rundown is here to help you make sense of these scary markets. We'll analyze all the top futures trading activity, explore the ins and outs of your favorite products, explain exactly how futures work, and hear from leading experts in the futures markets. We'll even tackle all of your wildest futures trading questions. If it involves futures, then you'll hear about it on the Futures Rundown. Old trading walks into a bar. New trading raises it. That's Tasty Trade. Keep focused with news feeds that matter. See opportunity differently in analysis mode. Chart your heart out with over 300 indicators. Plus, you can get low pricing, lots of education, and a support team that really gets how traders trade. It's no wonder Investopedia named Tasty Trade the best broker for options in 2024. Genius loves company. Go to tastytrade.com/podcasts and see for yourself. Tasty Trade Incorporated is a registered broker-dealer and member of FINRA, NFA, and SIPC. And now, it's time to break into the futures markets. It's time for the Futures Rundown.
All right, everybody, that music means we are back for the first time in the new year for the Futures Rundown. My name, of course, Mark Longo from theoptionsinsider.com, as well as on the network upon which all of you folks are binging. Make sure you're A, subscribed to the full network, wherever you get your favorite podcast, and B, if you want even more fun in your life, it's hard to believe there is more fun, but there is, theoptionsinsider.com/pro, live streams, pro Q&As, giveaways, options oddities with unusual activity. Rumor has it, a volatility death match coming up soon. You want to check that out. Theoptionsinsider.com/pro is the place to go. And we thought, you know what? As we kick off this new year in the futures market, who better to join us than our old pal, Mr. Dan the Man Gramza from Gramza Capital Management. Mr. Dan the Man, welcome back to the Futures Rundown, and Happy New Year to you, sir.
Thank you very much, Mark. Great to be here, and the same to you and your family. Looking forward to a new year exploring these markets.
What better way to kick off a new year, Dan, than by looking back at a wild, untamed year. Last year was, I think you could pick a lot of different adjectives, Dan, and most of them would apply with the exception of probably boring, because last year was not boring in the world of futures. You pick any market and they had, for the most part, a pretty rocking year. So, Dan, we thought it was a good time to look back on the mad year that was 2025. And we're thinking about just saying, let's just call it looking back at 2025, but our chat already beat us to it with the best possible name. Let me credit where credit is due. I think it was Mr. Unlimited said, we have to say the episode is called Giving the Big Adios to 2025. What do you think, Dan? I like that. That just brought a smile to my face. All right, Dan, you ready to give the big adios to 2025, sir?
Yes, I am.
All right, then, let's do it. Let's enter the trading pits for the first time in the new year.
It's time to break down all the action that's lighting up the futures markets this week. What's limit up and what's crashing and burning? Let's find out. It's time to enter the trading pit.
All right, everybody, welcome to this special edition of the Trading Pit, where we break down the big winners and losers, all the fun from the mad year that was 2025. Now, if you listened to the show on and off last year, you might have some idea of what was lighting it up. But you know what? There were a few products that made appearances on both sides of the ledger last year. There's a couple in particular that I'm really thinking of. Where did they settle out for the year? Did they make it into the top and bottom list, listeners? Well, we got to find out now. But before I start breaking down the list, Dan, before I start crunching the numbers, when you look back at the mad year that was 2025, what really stands out and resonates to you, sir?
Well, excuse me. I think I would start with, in terms of volatility, in terms of movement, in terms of trends. Then we need to look at the precious metals, gold, silver, copper, platinum, palladium. They all had their moment in the sun. Silver, as we've talked about in the past, the thing that's interesting about that market, it has a stutter step. It'll go sideways, get very boring, but boy, it can lead the pack. And I think it's always important to keep an eye on silver if you're going to trade precious metals. But we had some other trends too, Mark. I mean, look at the stock indices. A fairly robust year we had in those markets. Different paces. What I found really interesting, Mark, is how we would see that change in volatility. If you look at the S&P and the NASDAQ, they have a lot of tech stocks. NASDAQ, about 48% of that indices, tech stocks. And we saw it infiltrate that movement in those markets, as opposed to the Dow, which doesn't have much at all. And we'd see Dow going sideways when they're taking off. We've also seen Dow towards the end of the year taking off much more than we've seen in the other indices. The Russell, in terms of that index, also marching to the beat of its own drum, although it's looking healthy as we go into year end. So I think those are interesting. In the currency market, the one that I find interesting is our friend, Mr. Yen. The weakness in that futures market looks like it's not finished, and that's really surprising. The other currencies are basically in sideways modes, and I'm looking for that to continue the first part of this year. Interest rates are at value. They're kind of a sideways move when I think about trends and where they may fit in. Then we had, ag. Well, boy, we hopefully we'll have time to talk about energy, Mark. What's happening in crude oil, what the expectations are. I think there's some errors in judgment when it comes to that marketplace. And also Nat Gas, one that people expected to explode, me being one of them. But we also saw weakness actually after we spoke last time. And that's a market that's behaving as it should, which is right now weakness. So when I think about those complexes, and we can look at the eggs too, the grains, in terms of what's happening with them. I just thank God there are farmers out there that's willing to take that risk. What tough markets. But that's my general overview when I think about what was really cooking in 2025.
Why would you want to talk energy? Would something happen over the weekend that would impact energy? I'm not sure, Dan. I'm not sure what you are referring to.
Well, Mark, what's so interesting is how there are some, what would you say, high expectations that's really not there when it comes to crude oil. I mean, I don't know if you want to have a chat about that.
We'll get there in a second. We'll tease the folks. We'll tease the folks. We got to break down the mad year that was 2025 first, Mr. Dan.
Yeah, that's
then
true.
we can
That's
get to all the fun dust ups I said at the end of last year, Dan, I told the folks, I said, watch out. January sometimes comes in like a lion, and lately it has been doing so, certainly post-pandemic. Pick a January post-pandemic and something crazy happened. 2026 is so far no exception, Dan. So
That's for sure.
Just something to bear in mind out there, listeners. Our prophetic warnings out there. You should pay attention at the end of the year. Before we get there, let's get to the mad year that was 2025. Really quickly, in your head, listeners, make your own list. What do you think made? We'll expand it because we're doing a end of year big Adios episode. We're going to do a top 10, not just a top 5. So what are your top 10 to the upside and to the downside in the futures market last year? You can probably think of a few, probably. Dan just nailed a couple of them. But we'll start to the upside list. Again, we're going to do a top 10. We're going to go deep this time. And Dan, we go all the way out to top 10 for upside movers for the year, Dan. You mentioned currencies earlier, but not maybe the one most people would expect. You know, we were talking a lot last year with our dust-ups with going on with Japan, with China, with the Eurozone, but none of those currencies coming onto the list. Instead, number 10, Dan, going to FX for the Brazilian real, up about 22.33% for the year, Dan. What do you think?
How about that? And we have some things going on in Brazil to help fuel that. You know, currencies are such an interesting market because they are a barometer of risk. They're a barometer of the cost of money. They give us a lot of clues about what can be happening in a country. What's the political environment? What's the risk attitude towards it? And Brazil is a very interesting country.
Interesting indeed. As we keep climbing the list, this one shouldn't come as a surprise to folks who were listening to the show in, I'd say, Q4, late Q3 of last year. We saw quite the run in the livestock market. So number 9 is feeder cattle. In fact, you might be surprised it's not higher on the list. Feeder cattle up about 27.33%. I'm not sure if you've had the opportunity to go buy some beef at the store lately, Dan, but it's not exactly cheap these days, sir.
No, it's not. And what's fascinating to me about the meats is the cycle that we have in that marketplace. So imagine you own feeder cattle. Imagine you're a feedlot, which basically you take calves and you fatten them up. You get them ready for processing. So you're looking for certain weight goals to now switch from feeder to live cattle. But that we also have to think about the cost of feeding those animals and what we might be able to sell them for. And what's also interesting to me is when that alignment gets out of whack, when you and I look at it and go, geez, we're not going to get any profit out of this. Our cost to feed them and process doesn't match up. So what happens? They go to processing early. So our herd decreases in size. And what's interesting, it puts upward pressure on what we have. And it takes about 2 years for cattle to recover if we have dropped a lot of the herd. So feeder cattle, not too surprising, but Mark, I think you're right. I would think it'd be higher on the list.
Yeah, I know it kind of came back a little bit towards the end of last year, gave up some of those gains, and that obviously cost it its positioning. But you know what? It's saving you some money at the grocery store at the end of the day. It's not a bad thing. What wasn't saving you money pretty much all year last year, Dan? In fact, I'm surprised this one isn't higher as well, is coffee. If there was a theme throughout most of last year, it's that coffee was up week after week on the show. Silver was kind of a late bloomer. It did most of its action really in the second half of the year. First half of the year, no one was really talking about silver with the exception of like, hey, how come it's not catching up to gold? Gold had a good year kind of out of the gate, so gold had a decent upside. But coffee was the one that delivered week after week. Ending up the year, Dan, number 8, up about 32.5%, sir.
Yeah, it had a strong move, actually, if you look at it over the last few months. Even going back to 23, if you look at the trend that we had that was causing that movement, it started in about mid June Yeah, about June of 23. And that began the rally that we've seen in coffee. It had a little bit of a break in 25, but it firmed up towards the end of the year. And it doesn't look like it's finished. But right now, we're looking for a sideways move in that market.
What isn't moving sideways, listeners, is number 7 on our list. It's copper, Dan. Copper's certainly having a great week this week, but people forget it actually had a pretty strong year. It kind of got lost in the story of all the shiny stuff. Everyone was talking precious, precious, precious. Everyone kind of forgot about the base, Dan, but copper coming in number 7 on our list, up 36%, Dan. So a good year to be base, if perhaps not quite as good as the shiny stuff.
Well, you're right there. But Mark, I'm skeptical of copper. And I'm skeptical of it because I'm not sure the demand's there that we're seeing, and that supply is as tight as we're seeing in terms of feedback out there in the marketplace. And the piece that's still wobbly in my mind is China. China consumes about half of the global supply of copper. China smelts, they process like 48 or 49% of the global supply of copper. And I just don't see the global supply there to soak this up. So it has had a good year, and yes, it's moving, but I'm still skeptical of that market.
All right, listeners, as we keep climbing our list, we did just post a fun little flash poll for our live listeners, as well as all you folks following us at Options. You can make your guess for what you think was the biggest loser for the year. Might come as a surprise to some of you, maybe not to a lot of you who've been listening to the show for a bit, but we'll see. Cast your votes. We'll see what your choice is in a little bit when we get to our list of the biggest losers. Before we do that, we have to keep climbing. The winners. We got to get to the biggest winner on the year. Number 6 listeners. I almost gave up the answer there. Number 6 listeners is a product we don't talk about as much because it isn't the most liquid or really easy to trade assets. It's one of the EMs, not the one you might think of, not uranium, but the other one. It's lithium. Coming in number 6, Dan, up 38, nearly 39%. Again, an interesting market, not for the faint of heart. For the most part, Dan, we talked about this one in the past on the show. What are your thoughts on lithium coming in here at number 6, sir?
Well, I think it's also a function of the liquidity of it. It doesn't take much to make a market move, and I think it's an example of that. If you look at the global supply of lithium, we have discovered more and more lithium. There's also discussions about substitutes for lithium. But the thing I find really interesting with that, it's a part of the complex that the CME group put together for a battery. And that's one of the elements. And I think it's a very logical product. And I got a feeling it's going to mature in the future. I don't think it's there yet for most people to trade, but it is one to keep your eye on, though, especially if you're thinking about EVs and the progress that may be happening with battery power.
Let's keep making our progress. We are now in it, listeners. We are in the top 5 winners, gainers, call them what you will, for the year. Number 5, Dan, all the way down number 5. This is an asset that kind of dominated the discussion for most of the year last year, certainly in the second half of the year. Just an absolutely wild, untamed beast. You and I have talked before how it is very much the psychological underpinning of most global economies. So to see it up this much in a calendar year is absolutely wild. What are we talking about? Of course, we're talking about gold, up nearly 60% last year, Dan, about 59%. Just an absolutely wild year for the king of the shiny stuff. And indeed, Dan, the at least psychological underpinning of most of our economies, Dan, 59%. Wild.
Wow, isn't that interesting? And when you think about it, since 1999, no currency is backed by gold. So what is the reason for to keep moving up? Well, we have that uncertainty factor, the idea of a store of value which has come into play. And we have central banks buying 1,000 ounces of gold every month. And I think that's the underlying motivator for that market. It's central banks. And, I think about discussions I've had with central banks, like the Bundesbank. How much gold does the central bank need? Well, is it as you said, Mark, psychological? Does it make people feel better that the central bank holds gold? Is that important? But there is one other factor, and who knows where this is going to shake out, but it's the de-dollarization of trade. Russia and China, for example, the BRIC countries, they don't want to use the doggone US dollar. If you use it, that it can be touched. $300 billion of Russia's assets are being held because they make trades in dollars, and commodities are priced in dollars. So how about then, if I got gold, you got gold, we're central banks. How about if we do a transaction in non-US dollars? Could we do it in ounces of gold? Could we just do it in a different currency and try to bypass the dollar? That's hard, actually. But if you look at China and Russia, the yuan has been the medium that they're trying to use. It's gold's positioning in our financial markets, I think, really has changed. And what's going to be interesting is going forward. People say it's got to be at the top. It's so expensive. No, it doesn't. We could have said that when the Dow was 1,000, and look where it is now. So it's not a matter of topping. It's a matter of getting high enough that nobody wants to buy it. And so far, we haven't seen that.
Let's see what else we haven't seen as we keep climbing, listeners, on our list. Number 4, Dan. We're getting away from the shiny stuff. In fact, it's the only other non-shiny stuff on our list for the year, Dan. It's a complex I don't go near. It is dairy. In particular, it is dry whey, Dan, up almost 75%. So, hey, you didn't need AI last year. Just go buy some dry whey, Dan. You were all set.
Yeah, that's true. It did give us a pretty good return. But it goes back to what you mentioned earlier, Mark, and that is liquidity. Is it, if you and I walked on the streets of Chicago and asked people, how many of you own some dry whey? Probably not too many. That's really a industrial product. It's the users that trade it, and it's thin enough that you get some movement, and it's really reflected there. If dry whey is so high, you would expect, class 3 milk to be up here, and you're not seeing that. Although that's another market that has some challenges when it comes to liquidity.
All right, I kind of gave it away with the rest, listeners. We're getting all precious all the time. It's just a question of what order. Number 3, listeners, for the year, it's palladium, up almost 90%, about 87% for the year. So, Mr. Dan, good year to be precious. It didn't really matter what you bought, it seemed like last year, but palladium coming in number 3, sir.
Yeah, how about that? And that's primarily used in our catalytic converters. It's not one that we put on our ring finger. It's really an industrial product that has the auto industry as the primary user of that product. And it's up here, I feel, because it was dragged along, not because of a supply-demand situation.
All right. Let's see what else was dragged along, listeners, as we climb to the number 2 spot. Keeping it in the P, precious. It's platinum, up 126% on the year. Dan, a wild year for platinum, sir. What are your thoughts?
Yeah, it sure is. You're right. And if we look at there is jewelry consumption of platinum. But the biggie, it goes back to those catalytic converters. And I feel this is another market like palladium that kind of got dragged along. I don't think we're looking at a supply demand situation for palladium and for platinum.
Well, I guess by process of elimination, Dan, people can guess what the big dog was last year. Heading into the middle of last year, Dan, people were not too happy with this asset. They were like, wow, gold is setting new all-time highs seemingly every day, and silver can't be bothered to get out of bed in the morning. And man, did it make up for lost time, Dan, at the end of the year, up I can't even say it with a straight face. 140%, Dan, on the year. Absolutely wild stuff here for silver last year, sir. What are your thoughts?
Well, it's one that I think if you're going to trade precious metals, you have to keep your eye on silver. And not that we've seen this kind of movement in the past, but we have seen silver lead the way. It goes through that sleepy phase to all of a sudden on fire. So if you look back over time, silver is one to pay attention to because it can lead volatility. And that's what you and I saw, as you said, Mark, towards the end of the year. Is it finished? Can we expect more from silver? Yeah, I think we can. Silver also is a little different, although gold has some applications from an industrial point of view. The electronics industry, when it comes to silver, is broadly used. And so there we could have some supply and demand situations for silver. So I think we have some potential fundamental drivers in that market. And then plus the idea that high price promotes activity and always advertises for the opposite response. And so far in silver, price is bringing those buyers in. And that's what we're going to expect in the first part of this year, especially if we have a geopolitical environment that keeps people wondering what to do next. So gold and silver, I think, are both to leave on the list of, watch, see what's going on with those. That volatility, I think, will pick up.
All right, Dan, we're getting to the part a lot of people have been waiting for. These are the big Adios assets, the one that you wanted to sell at the beginning of the year last year, and hopefully maybe you did out there. In fact, we had a little fun, Dan. We gave our audience a bit of a flash poll right before we got to this. We said, what do you think was the biggest loser for the year in the futures markets? We gave them 4 choices, Dan, so it was a multiple choice test. It was a little easier. One of them, only one could be the correct answer, Dan. We gave them ETH, Cocoa, OJ, and the VIX. I won't have you guess which one is the biggest loser because you obviously know the answer. What do you think our audience is voting for right now, sir?
I would say VIX.
Yeah, you know our audience. That's why you put that in there. Our audience likes a little VIX action. VIX is actually tied for second, right around 14% right now, Dan. Tied with Cocoa, also at 14%. The overwhelming majority of our audience, at least in the early voting, Dan, 71% going for ETH. They think ETH was the biggest loser of the year. And Dan, we may have pulled a fast one on them. We got a little tricky with them because I will admit all the rest of these are on our list. Only one of these assets is not on the top 10 biggest losers for the year, and that is ETH. ETH came in, Dan, at number 11, just outside the top 10 for losers for the year. So I guess if you're an ETH bull, that actually makes you happy. But ETH, Dan, I've said this before on other shows. I think even though it's not in our bottom 10, it definitely deserves an honorable mention. I don't know if I've ever seen an asset, at least a major liquid, highly traded asset. We've seen meme stocks and all that kind of nonsense do these things in the past, but a major market leading asset like ETH have the year that it had last year, where it started off the year in the toilet. By end of Q1, beginning of Q2, it was on or near the bottom of our list for biggest losers of the year. And then the turnaround that it had, going all the way up to pretty much the top of the charts for our winners for the year, Dan, and then to turn around again and break into the list of losers. I don't know. There are not many assets that have done that in a calendar year, Dan. Certainly since we've been doing this future show, there are none. So kind of a wild asset, definitely deserving of an honorable mention, sir. What do you think?
Yeah, I think you're right. It does deserve that. And the word volatility does come into play when we think about it. But Mark, I wonder if we're seeing that because of two things. One, people just don't know where it fits in. And two, it's a perception market. And I think those two factors maybe has some play when we see this much volatility. And, people run in, run out, and we'll see those gigantic moves in that market. And I think the market itself, the people who trade it, are also sensitive to, hey, this could be a high, hey, this could be a low kind of attitude. So it's like an anxiety market is the way I think of it.
Let's see what other anxiety we could cook up here with our list of the biggest losers, listeners. Number 10, again, back to my favorite complex, Dan. We're kicking it off in dairy with cash-settled cheese, off nearly 18% on the year. So, Dan, some dairy getting pricey like whey, and then the cheese saying no thanks last year, Dan.
Yeah, it sure did. But I don't have much insight in terms of cash cheese. So that one I'm going to say, although I love eating it, and I had some for lunch, but I'll pass on that one. I don't have any insights there.
Wow, we finally done it. We finally found the market that flummoxes Dan. It is cash settled cheese, listeners. So now you know. If you want to throw Dan a curveball, cash settled cheese. Number 9, Dan. Number 9, Dan, an asset that I have a feeling we're going to be talking about with this week's action in a little bit, but we got to look back first. It's our old pal WTI, aka crude oil, off about 18.5%. So, yeah, the narrative for most of last year was downside for crude. There was a lot of talk, people coming on this show and our Twifo show talking about, can we break through 65 handle, break through 60 handle? Spoiler alert, the answer to all of those was yes. So an interesting year, some interesting stuff to start the year in crude. Again, we'll get there in a second, Dan, but as you look back on last year in crude, sir, what really resonates to you?
Well, I think it did what it should do. And all you have to think about is geopolitical environment and supply and demand. And crude oil is doing what it should do.
All right, let's see what we should be talking about coming in at number 8. Listeners, it's an asset we've said before, doesn't get maybe the interest or the attention it deserves. It is certainly a very volatile asset. It is lumber coming in again, number 8 off 19.5%. Lumber, not quite what it was back in the heady days of 2021, Dan, where it was, I think, by far the most volatile asset on the planet. A wild year for dead trees. Not quite as wild this year, but still slotting in nearly 20% to the downside. If you gave it the big adios at the beginning of the year, you're a happy camper, sir.
Yeah, you would be. And it's also a barometer of our housing industry. And what surprises me is actually that it's in this list. And the reason is the demand for lumber. When we think about the hurricanes, when we think about the god-awful fires in in California, those homes are going to be rebuilt. That demand for lumber is not going away. And if you look at the Northeast and Northwest part of our country, that's where a lot of the lumber that we process here, besides our friends in Canada, come from. And they're still in healthy conditions. So this one is a surprise to me in that regard because of that latent demand. So, Mark, if that's true, then it's probably one that you and I would want to keep our eye on going into 26. Maybe that's on our watch list, just as a side note. The challenge with that market is, liquidity and things along those lines. I remember when it traded on the floor, started trading on the floor at the CME. And I had these guys in classes that I was teaching at the CME. There were only 6 people in there, and they traded mostly spreads. That was the way they were trading lumber. Uh, Jim and Tim, 2 brothers, were in that pit. Hey, if you're listening, hey guys. But I mean, it's matured way beyond that. But it is an interesting market.
Shout out to
And
Jim and Tim in the lumber
yeah,
pits or wherever you're hanging your hats right
good
now
guys.
out there. Everybody loves Jim and Tim from the lumber crowd. As we keep moving down our list, listeners, to number 7, another asset we've talked about once or twice on the show last year. It's our old pal, the Widowmaker, aka Nat Gas, and looking red last year, off almost 22% on the year. Dan, Nat Gas was a product that certainly delivered last year. It had some highs, it had some lows, had a lot of put up a lot of volume on the options front. So certainly an interesting product, one that a lot of people are clearly sinking their teeth into on the trading front. Selling off a wee bit last year. What are your thoughts, sir?
It should have. It is a supply demand market. It is a market that is forward thinking. And it's looking at weather is one of those things it monitors. Geopolitical environment, big impact on that market. And if you look at Europe, just a few years ago when Russia invaded Ukraine, Nat Gas was going nutso. But we're not seeing that because some of the supply situations in Europe have calmed down. Russia has been replaced in some countries, but some countries really has not had much of a choice, like Hungary, for example. They still get Russian nat gas, but the supply chain, the supply ability changed globally. United States has changed. Our ability to send nat gas to other parts of the world, to Asia. China buys a lot of our nat gas, for example. It's changed. Nat gas, again, I think it's doing right what it should do. And being down like it is here, I think that's logical.
All right, let's keep dropping on our list, listeners. To number 6, we have a tie for number 6 because they are the same product. At the end of the day, it's our old pal Bitcoin, selling off nearly 25% for the year, about 24.75%. Obviously, that's the micro and the big Bitcoin futures. Dan, whither Bitcoin goes, so goes the rest of the crypto market. A lot of people have been worried about the impact of these digital asset treasuries, maybe dragging Bitcoin down. And at least for the end of last year, that was indeed the case. Bitcoin off somewhere in the ballpark of 25%. Sir, what are your thoughts?
I don't think Bitcoin knows what to do. The market action that we've seen in that complex is just, it's not, it has a bullish bias, but no bullish paper. We don't have the consistency you need to create that trend. Does it want to go up? Yeah, indications are, if you look at it structurally from a chart point of view, yes. Are people buying the break? Yes. But there's no paper afterwards. There's no commitment. And I think that's what it's lacking. Sideways movement here, I think, makes sense.
I may be looking at that saying that sounds a little high. These are the futures we're looking at after all. So where the futures are marked on the year. If you look at the cash,
right,
that sell-off's a little bit or the cash. Look at me. If you listen to the spot, listeners, that number is going to be a little bit lower. Number 5, going out to rough rice. It was a rough year, pretty much all year for rough rice, Dan, and that was indeed the case. Selling off nearly 28% on the year. In fact, I'm hard-pressed to think of a month when rough rice was up last year, Dan. Just a rough year for rough rice, sir.
It was indeed a rough year. And that'd be another good one to give it the big adios. Rough rice is one that it's changed in terms of global supply of rice. It's changed. I mean, Thailand exports a lot of rice. That's a good country to look at in terms of their exports. Something that happened this year that I still can't totally believe, and that is Japan. As I understand it, and maybe I got this wrong, but Japan was willing to open its doors for rice. Ja Rice in Japan is not just another crop. It's a total different part of the culture and the country. And for them to be willing to even think about that surprises me. So distribution, I think, is going to be changing for what we see with rice. Production, you want to look at the southern part of the United States, Texas, Louisiana, those there, Arkansas, when it comes to rice and production. So its place in the global trade of rice is changing, I think, and supplies are high. And we've seen that all year long. And I don't know if that's about to change. I don't see anything that would say, get ready to buy rice. We don't see any signs of buyers coming in.
All right, I'm going to keep dropping. I'm going to go dig into that Bitcoin futures number a little bit more, Dan, because that seems a little high to me, nearly 25%. I know in the past our system had problem with ETH. I think the way the ETH and the Bitcoin, the crypto futures, the CME, I think that they give our system some problems out there. So probably it should be a little bit higher on our list, in which case maybe ETH did slot in there to the number 10 spot. But either way, not a great year net for crypto out there, listeners. Number 4, let's go out to number 4. It's our old pal Cocoa. Off nearly 30% on the year, Dan. I've been saying most of last year that if you needed a hot beverage replacement for your coffee because it was getting too expensive, you could do worse than cocoa. You're getting more sugar. You're not getting as much caffeine. But if the heat is what you're after, Dan, and you want it to be cheaper, then maybe cocoa is your choice for 2025 and now for this year, sir.
Well, I like cocoa. And what's interesting about it is cocoa is one of those markets that trades in a band around the equator. So you don't see it in the northern climes or way south. It's in that very specialized band. So if you look at Brazil, or if you look at West Africa, if you look at Ghana and Ivory Coast, the main producers. Now, most of that cocoa goes to Europe, but that's really what you want to keep your eye on. I've had a chance to do some things with the government in Ghana on cocoa and gold and crude oil. They're the number 6 supplier of crude oil in the world, which we don't think of. But when it comes to cocoa, you want to watch those two countries. They have different export approaches. Who knows what the right one is? But that's the real key. And we've had, looks like, healthy production, healthy demand. There's always demand for cocoa. And that is definitely a supply demand market. And the value of the dollar, because they trade in dollars. So cheaper dollar usually creates more demand for these products. We expect prices to go up, for example. So cocoa, it's one to watch, but right now it looks pretty healthy and some weakness here, not too surprising.
All right, let's keep running with our list, listeners. We're coming to it. Number 3, Dan, I kind of debated even including this. Technically, it falls here, but this is an asset I've said many times last year. If you don't like where it is, just wait 5 minutes. This thing is all over the place. What are we talking about? It is Equity Vol, aka VIX. For our system, it has it off a little over 30% for the year. There's a lot of different ways, obviously, you could calculate VIX. This is looking at the futures. If you look at purely the cash was down about 16% on the year. And obviously, you can't trade the cash, so it's kind of a meaningless number. And again, if we wait 5 minutes, Dan, VIX will be somewhere else entirely. But just a weird product, but I kind of put it in there because they did annihilate vol last year, especially in the last few weeks of the year, which is really where a lot of this crushing came. What are your thoughts on equity vol last year, sir?
Well, I think the VIX is also doing what it should do, which is down, and it's on this list. I think it makes sense when we think about where the stock market is, where the S&P 500 is, we would expect VIX to be weak, and it is. So, and you're right, it is tricky in terms of how it's calculated. It is tricky in terms of its volatility, but I don't know. I think it's a-okay right where it is, and I look for it to be in these lower reaches throughout the coming year.
All right, now we're getting down to it, listeners. Our bottom two, what are they? Get your guesses in really quick. Number 2, listeners, back to dairy. Dan, I've said for a while, your breakfast table, at least, the coffee's getting more expensive. Just about everything else on the breakfast table getting cheaper, including the butter you put on your toast, coming in at number 2, off 43% for the year, Dan. So, yeah, I mean, all the dairy, for the most part, with exception of whey, getting cheaper, Dan.
Yeah, it is. So butter cash settled for me. I use it, but it's in the same category as the cash cheese. I don't have a lot of insight into that market. Although if you look at class 3 dairy, that can provide some arm's length insight, I think, into the butter market. But if you look at dairy and you look at where this is, it's probably a reasonable level for cash settled butter. But I just don't have any experience with butter cash settled. So cheese and butter are
Cheese
just
and
not
butter.
my wheelhouse.
Your two kryptonites, Dan. Our chat is saying Dan doesn't. Frank pointed out, wow, Dan doesn't like the cheese heads either. Maybe he wants to know what are your thoughts on cheese heads, Dan.
Ask me that after Saturday.
Yeah, that's true. After the big game.
Yeah,
Bears versus Pack for the playoffs. Only the third time they've met in the playoffs. How wild is that? 100-year rivalry. Only the third time. So,
you know, I got to tell you, if Bears win, then I feel I'm done for the season.
Yeah,
I don't care what happens.
That's like the Super Bowl for Bears fans. Beating the Packers again, let alone in the playoffs. Sending the Pack packing. Yes, that would be, I know for a lot of our Chicago listeners. For those of you up in the Great White North, I'm sorry. I think you're outrepresented by the Chi-Town fans here on the network. But an interesting contest coming up this weekend as we get to the number 1 most interesting spot, Dan, on our list. This is another asset that I'm hard-pressed to think of a month where it was up last year. It was OJ, Dan, yet again. Your breakfast table getting cheap. Kick the coffee to the curb. It's not good for you anyway. Have a little bit of OJ in the morning. Off nearly 50% on the year, Dan, about 49%. So a good year for your breakfast table, at least, Dan.
Yeah, it is. How about that? And this is a supply-demand market. This is one that we want to pay attention to what's happening in California and Florida and the freezing temperatures and what they're doing and any kind of problems with in terms of quality of crop and volatility. That's what I think of when I think of OJ. It's a market that can really rock and roll, but it's one this year from about mid-year. I think it was, no, not mid-year, like towards October, I think. No, we're talking OJ. Earlier in the year, we saw softness in this market, and it just broke to the downside. And the thing that's interesting about OJ is where we are now. And for the last couple months, towards the end of the year, we have seen buyers coming back in. And the issue now is, can they follow through? They're here with both hands. Even though we're down for the year, the way it's starting out this year really isn't too bad. So if you're on the short side, I'd be cautious when it comes to OJ. And if you're looking for opportunities on the long side, we may be finding those right now where it's trading.
All right, really quickly, Dan, I did just re-rack the top half of our list because I want to make sure some of those settlement numbers with for some reason, whatever it is, I'm not sure what gums up the works, but the crypto futures always throwing a wrench in the works. I want to make sure some of our listeners, a lot of our listeners, key off the spot. If you look at ETH spot for the year, it was down about 11%. Bitcoin spot was down a little over 6% on the year. So if we re-rack them, the top half of our list with that in mind, those fall off the list. So number 6 would be Nat Gas. Number 7 is lumber. Number 8 is crude oil. Number 9 is cash settled cheese. And number 10 would be Brent. So WTI coming in at number 8, and number 10 would be Brent. Just something to bear in mind out there listening. If you're writing in saying, wait a minute, my spot was only off this amount. I get it. There's different ways to look at these products out here. Obviously, we're looking at it through the lens of futures, but many different ways to carve up the onion. But Dan, you touched on it at the top of the show. We got to get to it now. We can't bury the lead anymore. We got to look at what's lighting it up for the new year. Dan, I'm going to do a quick breakdown to the upside here, and then I'll do upside and downside. Then you can kind of regale us in the time we have remaining with what assets are lighting up your tape this week. And number 5 this week, listeners, we got our old pal, Rough Rice, up about 6.5%. So finally getting some love back here in the new year. Number 4, we got our old pal, ETH, up a little over 6% for the week. Number 3, coffee, up 6.85%. So that's not going to come as welcome news to all of our Starbucks fans out there. Number 2, OJ, up 12, almost 12.5%. So maybe OJ won't be the biggest loser of the year in 2026. And then big mover this week, Lithium out there, up 25% out there. Copper not making it into the list, which is kind of interesting. Big week in copper out there as well. And then to the downside, let's go number 5, listeners, back to dairy. It's dry way, off 3.33%. Number 4, crude oil, off 3.5%. Number 3, cash settled butter, off nearly 5%. Number 2, we're going out to heating oil, off nearly 5% as well. And the big dog, Nat Gas, off a little over 12% on the week. Dan, I know you want to talk about energy in the time we have remaining. Obviously, some wild stuff going on the crude front as a result of the weekend. What's been catching your eye, sir?
Well, I think crude oil, the point is crude oil is doing right now what it should do. We have plenty of supply globally. And people keep talking about Venezuela, that it's going to have a dramatic change. I don't think so. And here, the reason is, if we just take a second and look at the evolution of Venezuela. First, it was a country that was incredibly prosperous. Does it have the world's largest proven oil reserves? Yes. But there's some issues there. But yes, it does. And if you look at the 20s and 1920s, they started to develop it. If you look at the 1940s, major players, U.S., Dutch, England, they all came in and started, these oil companies really started to ramp up the production capabilities of Venezuela. They got up to about 3.5 million barrels a day. They were cooking. Then 1999, Chavez was elected. By the way, as a side note, Venezuela was one of the cornerstone countries in the formation of OPEC in 1960. So they were around when that organization came to being. But in 1999, we have Chavez getting elected. And in 2002, it was a critical, I believe, a turning point truly for Venezuela on crude, because they had a strike. They fired 18,000 people. Now, along with that, it's the technology, it's the skill level. You know, producing crude oil is not easy. The tech part of it is a huge part of it. And that knowledge went away. So not a good thing. And the result is, if you look at their systems, if you look at what they have, it really did deteriorate. The only, I think, bright spot when I think of Venezuela is Citgo. Citgo, you know, we used to have Citgo stations all over the States, and that was their distribution arm for their product. So I think Citgo has some potential, and that's where the focus should be to begin rebuilding for that country. But they were at 3.5 million. Today, they produce about 800,000 barrels a day. So less than 1% of global supply. That's why you're not really seeing the crude oil market responding, because for them to get up to speed, and it would take, you know, years, maybe 5 to 7 years for them to get up to 3 million barrels a day. Could they increase it a bit towards a million? Yeah, maybe in about a year, year and a half. Trump has said, well, oil companies will come in and they'll start working on it. There's one other thing that happened in the past. And if I was an oil company, I'd be thinking about that today. In 1976, when things were going well in terms of production, Venezuela nationalized oil. And when they nationalize it, it now becomes owner is the government. So all those oil companies that had investments there, they said, by the way, your stuff is my stuff. And we saw that in Iran. We've seen it in Saudi Arabia. Can it be done? Yes. But it went from a technical product to a political product. And that also, I think, hurt their ability. But let me ask you this, Mark. You and I right now are an oil company. I understand Trump is saying we should go there and invest. Do I want to put billions of dollars in there right now? Well, one, it's going to have to be a different agreement. Their NOC, their National Oil Company, EDVSA, needs to be a sharing arrangement. So, and Trump hinted towards that. So we need to see a change there. If we don't see that, forget about it. Venezuela is not going to become a player in the global marketplace. If that happens, and I think they have a chance, but it's going to take a few years, that's going to be the big deal for it. And I hope and pray that it does happen, because that'd be good, as Trump has said, for the people of Venezuela. The potential there is tremendous. One last point, and it is the quality of crude oil they have. They have heavy, sour crude. It takes extra processing to process that. We have that capability in the United States. Citgo has refining capabilities for that. But when you compare that and people say it's like Saudi Arabia, it is not. Saudi Arabia is light and sweet, like a lot of our production in the United States. So there's a lot of things. You know, you can produce it. Does anybody want to buy it? That's the other thing. And if I buy heavy sour, I got to be able to process it. And that would mean United States right now. So just a few thoughts to keep in mind. I think that Venezuela is in a very precarious position. It's not going to turn around as quickly as people expect. And we're not seeing the crude oil market respond to it, because it shouldn't. And we have a lot of supply right now out there, with more coming online. So I just wanted to mention that.
That's important stuff. A lot of people were wondering why we didn't see, you're right, the more immediate response in crude prices. And we're also hearing, as you pointed out, a lot of the infrastructure issues that you mentioned. It's going to take a lot of investment to really tap into some of those resources. It's not just as easy as swapping the guy for a gal at the top. Dan, you have to do a little bit more work behind the scenes to actually make the crude flow. Unfortunately, that's all the flow we've got for the show today. Dan, did you have a fun time bidding a big adios to 2025, sir?
I did. It's always great to be with you, Mark. And for those listening, thank you. Hope there's a few ideas you found helpful today.
A wild year in the markets. Maybe we could do with a little bit less wild action. I mean, we want active markets, don't get me wrong, but there were some certainly wild things. This year is off to a wild start already, Dan, so I don't know. Maybe might be in for more this year. We shall see. Either way, you got to stay tuned to the show, listeners, to get your fingers on the pulse of what's lighting up the world of futures. And in between episodes of this show, Dan, if they want to check out a video or two on everything except cash-settled cheese, where should they go? What should they do?
I have a website, dangramza.com, and there's a free video that looks at, 5 or 6 markets every day. It's a few minutes, and there's a course and a more detailed description of what's going on. I'm looking at 22 different markets, and what you'll see are red and green lines, which represent buy and sell levels. These are not buy and sell recommendations, but you can go back over 10 years and see how those lines changed. As information came out, how did I move those? And it gives you some another point of view when it comes to futures. If you've never traded them, a place to begin, just watch them. And you may see some opportunity there in those markets.
Dan Gramza, GRAMZA.com, the place to go to kick the tires and light the fires. That is going to do it for us on the Futures Rundown for this first episode of the new year. Happy New Year again to all of you out there. Not done on the network, though, today. Back again after the closing bell for a little bit of the hot options report action. What was lighting up the tape in the world of options? Well, you got to find out. The Hot Options Report is the place to go for all that fun. Back again tomorrow for our usual triple header of the option block in the morning. First time checking in with our buddy, the Flowmaster. That should be fun. His thoughts on 2025 should be very interesting, followed by very much the sister program to this one, This Week in Futures Options. And then, of course, we wrap it up tomorrow with another episode of the Hot Options Report. Friday, of course, volatility views. And then we're back for you pro folks exclusively talking all things unusual activity with options oddities. And then one more Thor for the week until we're back again next week, all the way through to next Wednesday, another episode of the Futures Rundown. Stay safe out there, everybody.
Old trading walks into a bar. New trading raises it. That's Tasty Trade. Keep focused with news feeds that matter. See opportunity differently in analysis mode. Chart your heart out with over 300 indicators. Plus, you can get low pricing, lots of education, and a support team that really gets how traders trade. It's no wonder Investopedia named Tasty Trade the best broker for options in 2024. Genius loves company. Go to tastytrade.com/podcasts and see for yourself. Tasty Trade Incorporated is a registered broker-dealer and member of FINRA, NFA, and SIPC. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.